Hi, and welcome to my deep dive on my investment portfolio that I have on Trading 212. The date is the 6th of April 2026, and I'll walk you through all the investments I've got in the portfolio, give a reason why, and it is transparent. This is my own portfolio. Please don't treat this as investment advice. Please do your own research. This is just for entertainment purposes only and to record my journey to try and get my portfolio up to about 50,000 with the main aim to drive dividend income into my retirement that I'm looking to try and get anywhere between £1,000 to £2,000 per year from it. So this is my portfolio as it stands. You can see that the unrealised result is an over £300 loss, so almost £350, so almost a 2% negative return. But I'll talk around what I've got in terms of a total. This is just the current investment value. So these are the investments. You can see it over here. You can see that I've got far too much in Visa at 10%. Legal in general is taking up about 8%, and then it goes pretty much within the financials here. Going back to this unrealised result, you're probably thinking, God, that's pretty terrible. And it's not great. But one thing I do want to show on the history, if I can get it to work, is you can see I've cancelled quite a lot, but you can see from my buys and sells, I've actually made a profit of almost £360 now. I think Neil Invest, which is a great channel that I watch and follow, he did this. He clicked on this one. Says a lot of content providers do not show their realised profit and loss because it's quite easy to show a portfolio that is all in the green because they've sold out at a loss and they don't show the position. And I just thought, well, I've never shown that in the deep dives I've done in the past. So this just goes to show that I have made profit when I've made sales, and therefore, I thought it'd be an interesting thing to show for the dividends for my journey. This one's going to be picked up. I've got a different video taking through this, but you can see some of the dividend payments. You can see April, I've already had one from my FTSE. So there's the dividends, and you can see the interest of 52. So from showing that, that should then show why, if I take you over here, you can see here the actual value of the portfolio is standing at just over 19. So on the investment side, it's lost 304. But if I take you out to the max, you can see it's actually up by £112. And that's because I've bought and sold, so I realised profit, and I've got the dividends, and that offsets the current unrealised loss that the portfolio is showing. So you can see I've made 112. And what's interesting, if you take it to the year to date, I'm £346 down year to date, £405 down over the last 3 months. Over the last month, 346. So you can see it was almost pushing 19,500 middle of March. And then what happened? The madness that's going on currently in the Middle East, which is having a terrible impact on pretty much most people's portfolios. Mine is not excluded from that. So from going and pushing, getting closer to that 20,000 mark, it then went way down, as you can see there, to sort of getting nearer to 18,000. And it has pulled back at the back end of March to now get me back up to where we're seeing on 19,000. But you can see there's a lot of ups and downs. Even today, the stock market opened, it has jumped, so it probably means that someone somewhere says there's going to be a ceasefire or it's all going to come to an end. So I'd imagine over the next couple of days that's going to drop quite dramatically again. If I just take you through the investments over here, so you can see the shares that I hold. You can see I've got 8 in Visa, 600 now in Legal in General, 250 in NatWest. The fall here, if I just take it over the month, the fall here is because it went ex-dividend and unfortunately the Middle East has taken it down. I've got Aviva, so that's sort of hovering close to my average, and it's coming back, and that's also gone ex-dividend. So I look forward to seeing something out. Unilever has gone down because they are selling their food business. I think they're keeping just below 10% of that, but I think there's a lot of uncertainty within the shareholders in terms of whether they want to keep what Unilever is becoming, which is pretty much a beauty company, because they've already divested Magnum. Now they're divesting the food, which pretty much leaves, while it's good growth within the beauty business. Did we buy into Unilever just to have that? And I don't think a lot of investors did. Meta, you can see over the last month that has fallen, so I held 2 shares in that. Hikma Pharmaceuticals, it doesn't even come near my average. Look at that loss at £72. There it is, look. So I was looking in a good position and now I'm not. So we'll have to see what happens with Hikma. Realty income, I'm happy. You can see that's comfortably above my average. I'm waiting for that to go down before I buy down. Realty income for me is a long-term hold. The Vanguard FTSE 100 distribution that I hold, £88 up. I'm waiting for that to drop down. I'm probably going to average up rather than average down here. As you can see, my average price is below 40. I don't really wanted it to go above the £40, but if I want to invest, then it's going to average upwards. Taylor Wimpey also gone ex-dividend, so hopefully that will come back and be in a much stronger position. But £83 loss. A lot of these are losses because of the current geopolitical risks and shocks that were currently happening over the last month. My accumulating FTSE 100 showing a very healthy profit there. I came in at 538. That's really good against 621. And even my distributing, so this pays a dividends to me. So I wanted both just so I can have them for different reasons. One, I do like to see the dividends. You can see that's coming in just about break even there. But you can see it had gone down. It's been quite it was quite a long way short, and then it's bounced back, and I wouldn't be surprised to see that one falling further, and if it does, I'll buy more of it. Microsoft is having a pretty tough time of it. You can see I've got in around here, but it has dropped down. Bets at Home, I did buy some more in March. Comfortable holding that. I think if it goes above my average, I will sell. I tend to sell, buy 50 and sell them again when it goes above, just so I can see that average come down. So you can see the average at 196, but pretty much 197. Hilton Food has not been a great investment for me. I think you have to go way back here. I have averaged down, but that's not a great position for that to be in. And I'm monitoring Hilton Food Group, good dividend payer, but I'll be looking at that in terms of what I'm going to do. Greencoat Wind, I did sell about a third of my position of Greencoat, so I've still got 500 comfortable for a long-term hold on Greencoat, depending on what government may or may not form in future here in the UK. Lloyd's, I'm quite happy to grow, so I'm waiting for it to fall back. I just didn't have enough cash. Now that it's a new tax year here in the UK, it means I can put more into the ISA, into this portfolio. If only that had come a week or so ago, because you can see it's really down there. It's jumped back up. If it comes back down towards this average, I'll come and buy. It goes ex-dividend on Thursday, so pretty much we'll only have 2 days, so I just need to see what happens there. But not bad, 500 shares within that. Oh, it's over $16 again for SoFi. SoFi, anyone who holds SoFi, you can see my average there, which once upon a time looked really good. Now if I go out, that 24.50 looked really good when it was up at almost 30. Now it looks terrible when it's down to the 16. It's had a pretty rough ride. Lots of shorting going on there. It's had a tough ride. I own 40 shares. I might take that to 50. Just need probably some stability within that share price, because you can see over the last month it's pretty much been a falling knife. So just waiting to see it stabilise, and then I'll probably uplift that to 50. I like SoFi. I got confidence in its medium and long term future, so I'm quite comfortable to hold. Tesco is held because it's recession proof, so I'm quite happy to hold Tesco. Very similar to Sainsbury's, which I've got further down the list here. So I'll probably look to take that Sainsbury's and double it at some point, but once again, I need it at the right price. IG Group, brilliant to me. Look at that, 25 shares, almost £100 profit already. That's pretty good. But then you could say it's very similar to Unilever. If I go up to Unilever, I could look back on here and just go, wow, look at that, over £51 per share. Now it's 41. It's dropped £10 per share over the past month, which is, that's the stock market. And if you want to see an example of the stock market in action, there it is. And very similar to SoFi. Stocks go up, down. You've just got to hold your nerve sometimes. Imperial Brands, I've got 10 shares. Probably want to increase that. If it goes to below 30, I probably will. Land Securities is there, holding at the moment. I probably should have sold when it was up here, but I'm holding at the moment. PayPal or PayPal, it's just really painful, isn't it? But look at that, it has jumped. It's above 46, so not done that for a while, so that's a bit of good news. Reduces the loss to 75. BP I'm holding. I did have Shell shares that I sold out of in full to bank a profit, but BP is really good. I'm holding BP for the long term. Tate & Lyle is there. I've got 32 investments, and I think Tate & Lyle might be one I sell out of purely because I've just got too many to track. Sainsbury's we talked about. Amazon, I've only got the one share in Amazon. I probably will buy if it drops below 200, but I can't get too excited. I think it's a good one to hold long term. Greggs, I've done lots of videos on Greggs. It's going to go ex-div during April. It's sort of break even now, back for me. I've got it at, I think, at a decent price. I might just hold on to it. If it drops further, I might double my holdings, but it's been quite a ropey ride for Greggs. You can see that from the highs. When I started investing in June, so you can see it was almost £20 per share, and it did drop. Look at that, below 15. Once again, below 15, even quite recently. So it's been a ropey ride for Greggs shareholders, especially if you bought up here. You're probably not too happy. But once again, I'm quite happy to hold 10. I did have 11 shares in S&P. Then I sold them out. I've bought back in at 93. And I think if it drops back down, now I've got more cash coming in, I will buy the S&P 500. Barclays, given I've got big holdings from my small portfolio, in terms of looking at it from that viewpoint, in Lloyds and NatWest, I'm still thinking about whether I'm going to add to Barclays or not. Same with HSBC. They're very tiny positions, so I don't have to think about them too much. And I do have Alphabet, very, very small, as you can see there, so I'm not really thinking about it too much. So I think, as you can see there, going back to here, 32 investments is too many. I will be looking to decrease that to below 30. I'm unlikely to buy into a new stock, though I might buy another house builder in the UK. But if I did that, another one's got to go. So I'm looking to drop it. So I'm looking to sell at least 3 assets from all here. These are, I'll probably trim just to release some capital at some point, because I did it to pretty much decrease my average holding per share. So these will probably decrease. I'm quite happy to hold these long term. Same with Unilever, I've just taken it to decrease my average position. Meta, I'm still wondering what to do with that one. That could be one that I'd sell. Hikma, I'll probably sell when the price is right, or at least the loss will reduce from there. I'm going to look to increase my Vanguard FTSE and my All World ETFs. So I'm looking to really take the percentage that I have in ETFs higher, because you've got those two, so that's what just about 6.7, and you've got that one, so we round it at 4, so call it 10.7 there or thereabouts, and the very small one down here, and I'll round it and call it 11. So at the moment my portfolio is 11% in ETFs, and that should be at the moment nearer 40 and then grows to 60. So I'm still very short of 30 to 40%, which is what it needs to be in ETFs, which I think I'll get there, and I'm hoping to get there by the end of the year with more investments. But that's where I'm at. So that is the deep dive in my portfolio. I hope you find that one useful. As you can see, it's just hovering above 19,000. I have invested 18,900, so you can see the return at the moment is just above £100. So that's the amount I've invested. I'll be looking to take that one by the anniversary, which will be at the end of June, to above 20,000. So that'll put it in a healthy position. So if you found it useful, if you want to follow my journey, please subscribe. It really helps me. I don't have that many subscribers. I think I'm on about 44, and I value each and every one of the people following it, and I love it if you put a big thumbs up and a like. That would encourage me as well. And I do need some encouraging, because once again, you look at the losses that I've had to take over the last month. So anything to cheer me up is probably a good thing. But I hope your portfolio is doing a lot better than mine at the moment. Stay strong, happy investing, and until next time, take care.